For those of you who have just started following Astra, I'll begin with a brief introduction to our mission, vision, and strategy. Astra is a space technology company. Our mission is to improve life on Earth from space. And our vision for a healthier and more connected planet inspires everyone here at Astra, and it's what unites us with our customers. In the first phase of our strategy, we're focused on scaling our launch services business as quickly as possible with an aim to dramatically increase access to space for our customers. Adam and I started Astra with the goal of providing daily orbital space delivery. In phase 2 of our strategy, we plan to leverage our frequent, low-cost per launch access to space and vertical manufacturing capability to rapidly develop space technologies into space-qualified market-leading products that are needed by Astra and our customers as we build next-generation space services. The Astra spacecraft engine is an example of a space technology we've acquired and productized this past year. Finally, in phase 3, we plan to bring all of these technologies together into a vertically integrated space services platform. Like cloud computing has enabled tech companies to build new applications without investing in upfront capital, buying servers, leasing data centers, and operating networks, the Astra Space platform will allow our customers to focus on their applications instead of buying dedicated launches, building custom satellites, and operating constellations. With this context, let's review some milestones from Q1 and this past calendar year, which have been a quarter of accelerating investment, customer adoption of our space technology products, and growth in our customer pipeline. In January, NASA awarded Astra the venture class acquisition of dedicated rideshare contract. Along with other launch and space service providers, this award represents a $300 million opportunity over the next 5 years. In February, we conducted our first launch out of Cape Canaveral under the first FAA Part 450 launch license in history, both important accomplishments for our team. And as you're aware, an anomaly at stage separation prevented us from delivering the payloads to our customer, but we took the opportunity to understand what occurred, and we quickly implemented corrective actions and fixes prior to the next flight. In March, our successful launch out of Kodiak, Alaska was a huge milestone for Astra, as it marked our first delivery of 22 customer payloads into orbit, just 33 days after our prior flight, which is less than half of the cycle time we achieved in our prior 2 launches. With these 2 launches in Q1, Astra tied with the United Launch Alliance, the joint venture between Boeing and Lockheed, as the 4th most frequent orbital launch provider in the world last quarter, behind SpaceX, China, and Russia. The fact that we can make it on this list with only 2 launches illustrates just how infrequent and inaccessible access to space is today, and why our model of frequent and affordable launch is so badly needed as the space economy continues to expand. In April, we announced that LeoStella has contracted with Astra to provide multiple Astra spacecraft engines for LeoStella satellites. This win was a direct result of our strategic acquisition of Apollo Fusion last year. The Astra spacecraft engine has demonstrated it can assist satellites in achieving and maintaining target orbits and maneuverability. To date, we have sold 61 Astra spacecraft engines and are excited by the continued demand for this product. And finally, in April, we added another launch for the Department of Defense onto our manifest as we continue to demonstrate strength in the mix of commercial and government demand. Looking ahead to the second quarter, the Astra team is excited to test our ability to execute a rapid launch cadence for the upcoming Tropics launches. Astra is honored to have the opportunity to serve NASA to further our vision for a healthier and safer planet as we prepare for a multi-launch campaign out of Cape Canaveral to deploy the NASA Tropics constellation. Tropics will observe deep inside cyclones so we can forecast storms better, improve disaster preparation, and ultimately save lives. These launches represent a significant milestone for the company and our mission to improve life on Earth from space. As our production and launch operation teams manufacture and launch rockets to provide launch services for our customers this year, we're increasingly focusing on Launch System 2.0, which will introduce the next version of our rocket, 4.0, which is designed for a weekly production rate in our new rocket factory with increased payload capacity, decreased material labor, and launch operations costs. Launch System 2.0 will allow Astra to address a much larger segment of the launch services market with more flights and higher margins. We look forward to sharing even more detail about our strategy, our roadmap, and Launch System 2.0 next Thursday on May 12th at our inaugural Astra Space Tech Day 2022. This will take place at our newly expanded rocket factory at our headquarters in Alameda, California, and we'll be video streaming the entire event. This event will showcase our leadership team, review the overall strategy. We're going to make some exciting product announcements, and we're going to let on-site guests tour our rocket facility. We expect over 100 participants to be in attendance. And now I'd like to turn it over to Kellen to discuss our first quarter financial results before we begin Q&A. Kellen?
Thank you, Chris, and good afternoon, everyone. As you heard from Chris, we continue to see customer adoption of our space products that will be deployed in our customers' constellations in the years ahead. First, let me now turn to review our Q1 results. Revenues in Q1 were $3.9 million, derived from launch services as we commenced paid commercial launch services during Q1. We launched launch vehicle 0008 on February 10th and launch vehicle 0009 on March 15th. Notably, the orbital launch conducted on March 15th represented our first delivery of customer payloads into Earth orbit. Cost of revenues were $11 million for the 3 months ended March 31st, 2022. This included $5.5 million in cost of launch services related to launch vehicles 0008 and 0009, as well as a write-down of $5.5 million of inventory net realizable value related to launch vehicles 0010 through launch vehicle 0014. First quarter adjusted net loss was $50.1 million. Q1 adjusted EBITDA was within our guidance range at a loss of $47.5 million. On a GAAP basis, our first quarter net loss was $85.7 million. The sequential increase in net loss was primarily related to the change in the fair value of the contingent consideration for Apollo Fusion of $15.5 million and a gross loss of $7.1 million. For modeling purposes, total stock-based compensation expense during Q1 totaled $17 million. This breaks down as follows: cost of revenues, $0.2 million, research and development, $6.7 million, sales and marketing, $1.6 million, and G&A of $8.5 million. First quarter additions for capital expenditures were $15.1 million and primarily related to finalizing the expansion of our Alameda manufacturing facility. We now fully occupy the entire facility and have begun installing production equipment for rocket manufacturing. Cash outflows for capital expenditures for Q1 totaled $20.9 million, which includes additions of $15.1 million and cash paid for current and prior quarter additions. We ended the quarter with cash equivalents, and marketable securities of $255.2 million and no debt outstanding. For the second quarter, we currently expect adjusted EBITDA loss to be between $58 million and $64 million, depreciation and amortization to be between $2.9 million and $3.2 million, stock-based compensation to be between $15 million and $18 million, cash taxes are forecasted to be 0, basic shares outstanding to be between 267 million and 270 million shares, capital additions to be between 18 million and 23 million. During Q2, we expect a meaningful increase in operating expenses as we accelerate investments into the development cycle for Launch System 2.0 or Rocket 4. Many of the variable expenses incurred during this cycle include development materials and consulting services, which are not expected to continue at the same rate in later quarters. Additionally, we will continue to target key hires for our engineering and operation functions that will allow us to scale. We continue to expect calendar 2022 to be a transformative year as Astra continues expanding our product roadmap and scaling production. As we outlined on our Q4 earnings call during the year, we will embark on a product cycle transition to our next generation launch system 2.0, as well as expand space product offerings led by Astra spacecraft engine. As mentioned earlier, Q2 is an important quarter as we make key investments in the development and execution of our product roadmap, capacity to conduct launch operations at scale, and implementation of systems that will increase productivity. Lastly, we will continue to focus on ensuring these investments deliver value to shareholders and set us on the path for long-term success.
First, could you maybe talk about the unit economics embedded into the guidance? I know the first quarter, there was probably some unfavorable launch pricing. Any color you can provide on what you're kind of embedding for the second quarter?
As we look at the launches of our Rocket 3 series. The revenue economics on those vary by launch. I would say on average, it's around that $2 million mark, but it does vary.
Gotcha. And it's fair to assume that the Tropics missions, I think the number is out there, has better economics relative to what happened in the first quarter, correct?
That's correct.
Any sort of rough timeline you could provide on the Tropics mission cadence?
It's going to be pretty rapid cadence. So, again, we have the goals that we set for the team and the mission, and then we have the weather. We have other things happening at the range. We have all the typical complexities that you're going to run into launching rockets. But I can tell you that this is a mission that we'd like to complete before the storm season, which is to say before we get into the summer. And so, the objective is to get the campaign started this quarter and get as many launches done this quarter as we can. But it is likely that we're not going to be able to get them all done by the end of the quarter. But keep in mind that that's still a pretty high cadence. So I think the team's goal is to achieve a better than monthly rate for this next series of 3 launches for Tropics. And that's really just to get the mission accomplished before the storm season begins. This is a mission that I think is pretty exciting because the more of the launches that are successful, the more data you get. But if 2 out of the 3 are successful, it's not mission failure. It's just a lower refresh rate for the constellation. So I think NASA designed this mission with the first flight that they did on the SpaceX Transporter mission to have some additional capacity. And they're really effectively paying for this series of launches from Astra what many of our competitors charge for a single launch. And so this allowed Astra to really deliver a capability for them that they wouldn't be able to get from any other provider because they needed 3 separate launches or multiple launches delivering the satellites into different orbital planes. This is truly, in my opinion, a great mission for Astra because it's a mission where a new capability like ours can be fielded. We can still achieve a success, and we can still we can deliver NASA fantastic economics at the same time.
Edison, the only thing I would add to that is to say that the rockets are ready.
Yeah.
We like to say rocket in a box sort of thing. And what we're waiting on is license for all the three launches under one license. So that's what's in progress right now. But the rockets are ready.
And just last one from me. Any color you can provide on the 61 spacecraft engine orders in terms of breaking that down by customers or types of customers?
We can tell you it's a number of different customers, and they're going to be deployed on satellites and constellations over the next couple of years. So I would just think about it as there's a lot of demand for that product. We're just getting started. We're really delighted to have 61 of them already sold.
And we're continuing to see the pipeline for these products continue to grow. And, we see continued success with those Astra spacecraft engines that are in orbit today, and that is driving demand that we see in our pipeline.
Yep.
Could you give us some details around maybe the kind of CapEx schedule that you guys are expecting moving forward?
I mean, some color is we've really, if you have folks at Space Tech Day next week, you'll see we've completed the expansion of our factory. So we've deployed a lot of CapEx in our facility to scale up to this weekly production rate for Rocket 4. We've deployed a lot of capital into equipment. So we're going to see that taper off into next quarter and the following quarter rather substantially because in fact, what we've seen over this quarter and the previous quarter is we've seen a lot of capital deployed to reduce the cost of producing rockets, basically. So this is why we went public. This has been the strategy all along. Let's expand the factory. Let's go from making 1 rocket a month by hand to making 1 rocket a week using a lot of more automated equipment, robots, machines. We've bought a lot of those machines already, and we're kind of getting to the end of deploying capital into the infrastructure in the factory and in the building itself. And one of the reasons why we thought it would be great to host Space Tech Day is a lot of the analysts and banks and investors should really see what we've built out here. It's truly impressive. And if you've been to SpaceX and some of the other companies, I think you'll walk into Astra and you'll see the right combination of investments in the equipment that'll have a direct result of reducing labor and reducing the cost of our our product. And that's really, it's not 3D printing, it's not chasing things with helicopters. It's just making a high margin product. It's driving the cost of our product down through automation that is going to get Astra to scale. So we're all about scale, and that's the capital that we have now largely deployed. We appreciate everyone's attention today and the questions. We're looking forward to hosting everyone next week on May 12th at Space Tech Day. We'll have this live streamed, and we're going to be welcoming a number of our investors, shareholders, customers, analysts here. And this will be an opportunity for you all to hear about Launch System 2.0, our roadmap. We're going to be making some product announcements, and we hope to have launch dates for LV 10, 11, and 12 as soon as we can provide them. And in fact, we're putting together, for those investors out there that are less familiar with how launches work, we're going to be putting together and releasing, I believe tomorrow, a detailed primer on what goes into announcing a launch date, and frankly, why we haven't announced the launch date yet, and why all those websites out there that publish purported launch dates are literally just reporting some of the preparatory work and filings that we do in advance of a launch, but are not actual launch dates. So we appreciate everyone's patience, and we're going to get out to Cape Canaveral, and we're going to do 3 back-to-back launches, and we're going to do them faster than we've ever done them before. So we're excited to see you out there on the webcast, and we'll see you at Space Tech Day next week.